Okay, so like imagine needing financial advice back in the 1960s.
You probably just ask, like your Uncle Lou at a family barbecue, right?
Between bites of potato salad, he'd tell you to buy low, sell high.
Not exactly. Like the most reassuring financial strategy, right?
All right.
Might sound crazy now.
But the whole idea of like dedicated financial advisors, it's a surprisingly recent thing.
So we're diving into, the history of financial planning.
How it evolved from those casual conversations with Uncle Lou into like a regulated profession.
Yeah, what's fascinating is that the need for financial advisors wasn't always there.
Back in the day, things were simpler, right?
A company pension, a savings account with decent interest, that was enough for most people.
It was like money just magically grew itself back then.
Right. But then came the roller coaster ride of the 1970s.
Inflation skyrocketing, recessions hitting hard,
Suddenly, people were lost.
realizing they needed help navigating this new turbulent financial world.
And that's when financial advisors started,
Exactly.
becoming the guides people desperately needed. And this is
It
important.
wasn't like flipping a switch, right?
Back then, anyone could call themselves an advisor. No qualifications, no real oversight.
It's almost comical to imagine trusting your life savings with someone who might have just been like really good at balancing their checkbook.
That's a terrifying thought. Like, where do I sign up for that retirement plan?
Thankfully, things have changed.
As the demand for financial guidance grew,
So did the need for, well,
some ground rules,
that's where regulation comes in.
increased training, licensing, strict codes of ethics,
It was all about building trust, right?
assuring people their advisors actually knew what they were doing.
And that they weren't just pushing products to earn a commission.
It became about actually putting the client's needs first.
Absolutely.
The materials you shared really emphasized that shift financial planning isn't just about numbers.
It's about building trust, being ethical.
A financial advisor's job isn't to sell you something
It's to understand your goals, your value.
and create a plan that helps you achieve them.
And speaking of values, there's a quote from the Code of Ethics you shared that really stood out to me.
A less than ethical financial planner concentrates on making money, whereas an ethical financial planner always serves the client's interests, and his or her income is generated as a byproduct of that service.
It's a powerful statement, right?
It completely flips the script.
Makes it clear that a true financial advisor's priority is the client's well-being.
Not their own bottom line.
It's about forming a partnership built on trust and shared goals.
Exactly. And that's where understanding where a client is in their financial life becomes so crucial.
A recent grad just starting their career has vastly different needs and concerns than someone approaching retirement.
Wouldn't you say?
Absolutely. It's like saying, one size fits all works for, well, anything.
So how does the world of financial planning actually address these different life stages?
That's where the life cycle approach comes in.
It acknowledges that our financial needs,
Our priority.
even our tolerance for risk, right?
Change dramatically as we move through life.
Okay, so it's not just about picking some stocks and hoping for the best.
Let's break down these stages.
The source material mentioned 4 key phases.
Accumulation, consolidation, financial independence, and gifting.
What does that actually look like in, real life?
Let's start with accumulation.
This is typically where you are early in your career
Maybe just starting to build savings.
and potentially still tackling student loans,
So that recent grad scenario we talked about.
juggling rent, maybe trying to build an emergency fund.
And retirement feels like a lifetime away.
Exactly. At this stage, it's about, managing those often limited
When
resources,
we're covering those essential expenses, right?
but also, and this is critical,
Starting to invest, even if it's small amounts.
because even if you're not exactly rolling in dough yet,
The power of compounding means those early investments have more time to potentially grow.
precisely.
To put it in perspective, if you invested $100 a month starting at age 25, assuming, average returns, you could end up with $50,000 more by retirement than someone who waited until 35 to start.
That's compounding at work,
Wow, that's a pretty compelling reason to start early.
even if it feels like a small drop in the bucket right now.
So what happens as we move into the next phase?
Consolidation.
This is typically when your career is more established,
You might have a bit more disposable income.
and you're starting to think more seriously about long-term goals like buying a home or retirement.
Okay, so things are feeling a bit more stable.
But the big life decisions are starting to come into focus.
Right.
And financially, this often means building a diversified portfolio,
Not just relying on one type of investment.
but spreading your money across different asset classes to manage risk.
Because putting all your eggs in one basket is rarely a good financial plan. Right.
Exactly.
Now, as we transition to financial independence,
Things shift again.
this is where you're no longer reliant on a paycheck.
Your investments and savings are generating enough income to support your lifestyle.
The dream.
No more alarm clocks.
No more office politics.
But that also means your financial decisions carry a lot of weight now.
Absolutely.
Preserving capital
That is, making sure your savings aren't depleted.
becomes a major focus.
You're probably looking at lower risk investments, right?
Focusing on steady income streams rather than chasing high growth but potentially riskier options.
Because the last thing you want is to be taking unnecessary risks with your nest egg at that point.
Okay, so we've navigated working life and entered the land of freedom. What's next on the financial life cycle?
The final stage, gifting, is where you're not just planning for yourself.
But also thinking about estate planning, charitable giving.
And potentially, leaving a legacy for your loved ones.
That's interesting.
It's like financial planning takes on a whole new dimension,
It's not just about accumulating wealth,
but also about what you choose to do with it.
how you can use it to make an impact beyond your own life,
Exactly. It becomes about aligning your finances with your values.
and making sure your wealth is used in a way that's meaningful to you.
Okay, so we've journeyed through these 4 distinct phases.
And one thing that seems to be a constant thread is the idea of risk tolerance.
How much risk you're comfortable taking with your investments.
And this is where it gets personal, right?
Absolutely.
What feels like an exciting gamble in your 20s might feel terrifying in your 50s.
Even if the potential payoff is the same.
And the research you shared really emphasized that our individual perception of risk is often very different from how institutions view it. It's like they're looking at, spreadsheets and historical data.
While we're picturing, I don't know, like our dream vacation or our kids' college fund.
Those numbers represent something very real and emotional for us, right?
It makes sense.
Right.
We're wired to feel losses more intensely than gains.
It's called.
Myopic loss aversion.
And it plays a huge role in how we approach risk.
Myopic loss aversion.
It's like a fancy way of saying we really, really hate losing money.
Exactly.
And it explains why.
Someone might panic during a market downturn.
Even if logically they know it's, probably temporary.
It's that like fight or flight instinct kicking in.
Only this time it's about selling all your stocks and hiding your money under the mattress.
Right.
And that's why having a financial advisor can be so valuable.
They provide that objective outside perspective.
And please stick to the plan. Right.
Even when your emotions are telling you to do something drastic.
It's like having a financial therapist.
Someone who helps you, talk yourself off the ledge when the market takes a dive.
Exactly.
Now, the research you shared also highlighted how
Life events.
a new job, getting married, having kids can significantly impact your risk tolerance and your overall financial plan.
It's like that example with Roger Beatty losing his job sent his risk tolerance plummeting, but landing an even better one had him feeling like he could conquer the financial world.
It shows just how intertwined our personal and financial lives really are.
And stories like Roger's highlight why a structured approach to financial planning is so crucial.
We need a roadmap.
A way to navigate those inevitable twists and turns.
And thankfully, the materials you shared actually provide a clear roadmap.
A 6-step process for, building that plan.
Exactly.
It starts with establishing that strong client-advisor relationship.
It's about open communication, trust.
Understanding what the client truly values, right?
Then comes gathering data. Income, expenses, assets, debts.
Yeah.
Getting that complete picture of their financial situation.
It's like putting together a financial puzzle, right?
You need all the pieces to see the full picture.
Precisely.
Then we move into analysis, really digging into those numbers, looking for any red flags.
And importantly, assessing the client's risk tolerance.
This is where a financial advisor's expertise really shines.
They can connect the dots, spot trends, and uncover potential opportunities.
Because it's one thing to have a spreadsheet full of numbers.
But it's another thing entirely to, understand what those numbers actually mean.
How they translate into a workable plan.
Absolutely.
And based on that analysis, we then develop personalized recommendations, specific strategies, and financial products tailored to the client's unique goals.
So it's not a one-size-fits-all approach?
It's about finding the right tools for each individual client,
Precisely.
and then
We put those recommendations into action.
that's the implementation phase.
Opening new accounts, adjusting investments, setting up budgets.
Whatever it takes to bring that plan to life.
So far, it sounds pretty straightforward.
But I imagine there's more to it than just setting it and forgetting it, right?
You're right.
The final,
And arguably most crucial step is the ongoing review process.
would we check in regularly, maybe annually or whenever a major life event occurs?
To make sure the plan is still on track.
Because life rarely goes according to plan.
And our financial plans need to be flexible enough to adjust to those changes.
Absolutely.
We've got to stay adaptable.
And that's where that authorization for information form comes in handy.
Remember that from the material you shared.
Right. That initially sounded a bit like paperwork for the sake of paperwork.
But now it makes a lot more sense.
It allows advisors to access their clients' financial information, bank statements, investment accounts, things like that.
So we can get a truly comprehensive view.
It's essential for accurate analysis and recommendations.
It's about transparency and trust, giving your financial advisor the information they need to, guide you effectively.
It strikes me that this whole process is really about empowering people.
Giving them the tools and knowledge to take control of their financial lives.
You hit the nail on the head.
It's about turning financial dreams of comfortable retirement, a home, financial security for your family into a reality.
It's about facing the world of finance with confidence,
Knowing you've got a plan.
a roadmap to guide you.
Precisely.
And that's a powerful feeling.
It really is.
Now, as we wrap up our deep dive into the world of financial planning,
I want to leave our listeners with something to ponder.
we've talked about how crucial it is to, review and adjust your financial plan as life changes.
So here's a question for you.
What one big life change do you think would have the biggest impact on your financial plan right now?
It's a question worth considering because it reminds us that financial planning isn't some, abstract concept. It's about aligning your finances with the life you want to live.
Both now and in the future.